Of prophecy to the headlines of today, the signs are unfolding around us. Welcome to Editor's Desk, the show that dives deep into Michael Vilardi's groundbreaking work on the end of times. Each episode, we examine the clues, the patterns, and the truth behind what may lie ahead. If you felt the world shifting, you're not alone. Join us as we piece together the story that was written long before our time. This is Editor's Desk, where understanding begins.
Welcome to the Editor's Desk. I'm your host, Mike Vilardi. Now today, we're going to do something a little different. Instead of talking about my book, Unexpected Assignment, I have a really special guest who's been done an amazing job in the field of taxes. Julio Gonzalez, who wrote this amazing book, Why Billionaires Love the Tax Code. And Julio, welcome to the show.
Yeah, thank you, Mike.
You're
Appreciate
welcome.
it.
You're welcome. And you are phenomenal. You're a well-known author, speaker. You own many companies. I guess I'll let you tell us about yourself, and then we'll talk about some of the strategies you put in your book.
Okay. Yeah, sounds good.
Yep.
Well, I appreciate you having me here.
Oh, it's a pleasure.
I started Engineered Tax Services 25 years ago to be a resource to accounting firms in tax credits, tax incentives, grants, so that they could do better at tax optimization and grants for their clients. And so it's been a great relationship with several thousand accounting firms along the way, and being a resource to create that tax equality, right? Everyone deserves tax equality, but Michael, you know it's a little tough,
Right, it is.
right, for everyone to get that.
Well, you got to know the code, right?
Yeah.
And you've kind of taken a deep dive into the code in your book, and you have some strategies that you laid out. Would you like to share any of that with our audience? And just giving us idea what they could do, if what the billionaires do that they could do.
Well, you know, Michael, it starts with last year we passed a new tax bill,
Yes.
which you know all about, right?
Yes, that's correct.
And in that tax bill, we passed 105 new tax deductions for small business owners, middle to low income families, and I'm really proud of that. So now this year and last year they have all these new deductions, but you know it takes a good accountant to make sure they're taking advantage of all these new benefits. And you know, the accounts are always a year behind, right? They're filing for the previous year. So we try to create that awareness and be a great resource to our accounting firms.
Yeah, because we got 179 depreciation.
Isn't that great?
Which is great. I mean, yeah, we got my partner who you're going to talk to later on today. We put together tax strategies because that way you can plan to use it and know that you're going to be able to cut your tax bill legally.
Legally, yeah.
Legally, and that's really the key. And that's the key. And I know as I flip through your book, I mean, you have the different you show different things in here that they could do. The depreciation planning for the future. Tax planning starts January 1st, which is very true. What are some of your when you start your tax planning for January 1st for your clients, what do you tell them to do? How do you steer that ship, so to speak?
Yeah, I think, you know, the biggest thing I share with them is that we should be meeting routinely to estimate what the tax liability is going to be, and then start using all these new tax benefits that we passed last year and all the tax strategies afforded to us, and start implementing those during the year. Because most problems I see, Mike, are that unfortunately most business owners don't get the information to their accountant till the end of the year, right?
Right, there's nothing they can do.
And there's everything you have to do to reduce your taxes has to be done prior to New Year's Eve midnight, right?
That's right.
So you know that, right? So let's make sure that we're not waiting till the end of the year, because by the January 1st, it's too late to reduce the taxes. But we can do a lot of things, right? We can invest in ourselves versus paying the IRS, right? We can take a tax liability and convert it to an appreciating asset.
Right, that's true. Do you, for retirement accounts and stuff, what do you recommend for clients with small businesses as far as retirement accounts, and what do you think is the most effective way for them to utilize a retirement account in their own company? You know what I mean?
I think that's so great. I mean, that's one of the keys, right?
Right, exactly.
We can pay ourselves and put money into ourselves through retirement.
Exactly.
We can set up a retirement account. You're probably great at setting up all the different kinds of accounts, but we could pay the IRS or simply take that money and put it into a retirement account and get the tax deduction. Why wouldn't we do that? Everyone should do it. But you got to do it before the end of the year sometimes. Sometimes they'll allow you to do it a little bit after, but still.
You're right. The IRA deduction you can take on up to April 15th of the following year, which is great. I mean, I've had to use that a couple of times myself where instead of having a liability, let me take the money and put it into my IRA, reduce and wipe out the liability and get a refund.
How great is that?
Which is absolutely phenomenal.
Yeah. I mean, we're rewarded. The IRS and the tax code is not about how to pay more, right? All the pages in the tax code, the 2 million pages, is about how to pay less.
That's right.
And we just have to understand it.
That's right.
One big way is just invest in ourselves through retirement.
Yes,
That's true. Like you said, if we owe some money, why not just put it in the retirement account and reduce the tax liability?
Yeah, and you know, I don't know, you get involved with self-directed IRAs or anything.
I think all those things are important.
Yes.
You know, we're not the investment firm, right? But certainly we know that tax liabilities can be reduced through investing in your retirement, yours, your wife's, your family, right, and your company.
Right, absolutely. So what does your company do for the accountants? How do you work? How do you explain to our audience so that accountants who might be watching this show understand what you can do for them?
Yeah, I mean, first and foremost, for 25 years, we've been doing cost segregation studies for all our thousands of accounting firms. And cost segregation is amazing, right? So cost segregation, when someone invests in real estate, IRS says we have to write that off over 30, 40 years.
Right.
But a cost segregation study basically is where we're taking a building and we're breaking it into components and saying, well, we didn't buy a building IRS, we bought windows, we bought floors, we bought HVAC systems, we bought walls, we bought all these components. And as we submit it through a components instead of a building, a lot of that stuff, I'd say on average 30 to 40% of it is an immediate deduction. So we can accelerate those write-offs.
Right, that's brilliant. No, that's great. That's a great strategy. So you counsel with the CPAs on how to do that for their clients.
Yeah, I mean, when the CPAs have a client that buys real estate, they call us. They don't have the in-house engineers.
Right.
Right.
Exactly.
So we're the engineers to them, and then we'll go out and we'll do the study and we'll say, yeah, you bought a building, but it's the floor, it's the glasses, it's everything inside, right? It's cabinets, it's everything we see in the studio, and then we write it off under components, and that way it's much quicker.
Right, because you're taking the expense up front.
That's right.
Instead of having to take it over time.
Can I give you an example?
Sure, of course.
Yeah, so like, I had a client. He owed $1 million in taxes on December 20th, right? That's what the estimate was from his accounting firm. So he took that same $1 million and bought a $5 million apartment complex, right? So he put $1 million down.
Right.
So instead of paying the IRS the $1 million, he put it into a $5 million apartment complex. We did the cost segregation study, which generated about $2.5 million in immediate write-offs. So he wiped out the tax liability.
Right.
So he took the $1 million to the IRS, put it into his own $5 million property. Now that's paying him monthly dividends in terms of rent. It's getting appreciation. And he converted that tax liability to something much more beneficial, right? I just love that, right? I love that about real estate. We get rewarded for investing in real estate. The IRS says if we do so, we get to write it off.
No, that's very true. You're right. I mean, there's some big deductions there. I mean, I just want to talk about a little bit of some of the other options, other things that Trump did with the big beautiful bill that people don't really recognize. One thing is, it was about, if you remember, under the Biden Inflation Reduction Act, they were going to hire 80,000 new IRS agents. Now, why would you need 80,000 new IRS agents?
Yeah, I mean, you know, let's talk about that, because Obama did the same thing.
Yes.
Right? So he went and built a big IRS agent, and he hired
you're right.
many agents, and then, but it didn't work.
No, it didn't work.
Right? They didn't collect more revenue. We just had more expense.
Well, you know why it didn't work? Because I worked at the IRS at that time.
Tell me.
I'm going to tell you. He only hired revenue officers and revenue agents. And what did that mean? There was absolutely nobody to help the public. In other words, they didn't hire people that would you walk in, for walk-in tax services. So what happened was they got absolutely flooded. If you call the IRS, there's nobody to pick up the phone
Still
and answer
not.
it and answer your question. Still not, right? So all those people just were purely for collecting revenue and creating assessments that give people tax bills. And what Joe Biden did in the Inflation Reduction Act, in order to do pretty much the same thing, here's what he did. This would have got 40 million people audited. 40 million, that's a big number. Here's how. He took the reporting requirement from your Zelle and your Cash App.
Oh, that's right.
Right? From $20,000
That's right.
to $600.
Yeah, that's
So-
every transaction.
That's exactly right. So he would have put 40 million people in the crosshairs of the IRS, figuring he's going to need those 80,000 agents to go after these mom and pops. I mean, you now have to say, no, that wasn't income. That $600 I received was from my father or my mother, and go prove it to the IRS.
Yeah,
I mean, what a nightmare that would have been. And Donald Trump reversed that.
thank goodness.
And thank goodness is right, and took that $600 back up to the 20,000 where it should be, where hardly anybody, I mean, very few people do the 20,000, but everybody does 600.
Yeah, thankful that happened. What Biden did, though, is sold it as, we're going to go after the billionaires.
Yeah.
Right? He said that. We're going to go after the big corporations, the
Right.
billionaires. But what happened? Nothing.
Right, exactly.
Right? Because
exactly right.
it's hard to challenge the billionaires. They're using the tax code.
They're using the tax code. That's right.
So you don't find
Exactly.
anything. So then you weaponize
Right.
the small
Right.
business
That's
owner,
right. That's exactly
the
correct.
families.
Yes.
And
Exactly
what a
correct.
horrible thing.
No, you're right, because the billionaires are paying the accountants big money to use the tax code to their advantage. And just like you said in your example, where you're able to have that guy who was going to owe the IRS $1 million, take the $1 million, invest in real estate, create $2.5 million in deductions, pay the IRS nothing, and now he has a building that's going to kick out revenue for the next 20 or 30 years.
That's right. That's
Yeah.
right. So thank goodness that got cleaned up by President Trump.
Oh, yes, yes.
And I think he sent some of the agents down to the wall and the border.
He did.
And,
He did.
ultimately, hopefully,
He
some of
did.
these small businesses that are working so hard and can't defend themselves, by the way.
Right.
Right? So when you weaponize the small businesses and you call them in for an audit, how do they fight for themselves? They don't have the resources.
Well, I am really glad you brought that up, because do you remember when Bill Clinton was president and he signed the law, the 1203 laws that allowed you to fire IRS agents? Now, how that came about was they had hearings on the Internal Revenue Service, and they brought in a business owner that owned a restaurant who was put out of business by the IRS because they had hired a waitress. The waitress wasn't any good. They fired her. She got pissed. She went to the IRS and said they had a double set of books, but she was lying. And she later admitted that she was lying. Well, the IRS, thinking that there was put them in a position where they had to hire lawyers, accountants, everybody, of course, couldn't find any, and they just went under.
Yeah.
Then they bring in another guy who was a homeless vet. Why was he homeless? Because the IRS seized his house. Because he owed them a couple of bucks, so they came in and did a seizure on the house, left him homeless. Congress says to the IRS, can you defend yourself? IRS says no. The reason the IRS couldn't defend themselves is because of the disclosure laws. If they disclose anything, they could an IRS agent could be prosecuted, lose their job, and go to jail. So nobody's going to get out there in public and talk about somebody else's taxes, because those are the kind of penalties that came into effect after the IRS did the case against Agnew. See, what they actually got into the White House. They wired the phones. They had Agnew. He took a no contest, if you remember.
Right.
And Congress said, well, we can't allow this. And they came out with the disclosure laws. They came out with, if you go to a bank account, you have to summons it. You have to send notice to the person. So there's no, they would know immediately that you summons their bank account. And then what Bill Clinton did was, after hearing these horror stories and the IRS unable to defend themselves, he talked about what's called 1203B, which
right.
basically, if an IRS agent does stuff they shouldn't do, they misuse their power, they can be fired, which is the way it should be, of course.
I think so.
And those laws are still on the books, and there are cases where, I know I've seen cases where the agents overstepped their authority. And I can give you one example real quick.
do.
Okay. I get a call from a lady in Vegas, and she says, Mike, I think I need to hire you because I had done a TV show. And I said, hire me. So she retained me. And she said, look, I had this woman come to my house. She showed me some badge on her belt. She pushed her way into my home. She says, lady, you owe the IRS money, and I'm not leaving without a check. So I wrote her a check, she says, for $500 to get her out of my house. The next week, we met with my accountant. While I'm in the office with the accountant, she comes in and she tells the accountant, if your client doesn't pay, I'm going to leave her naked and homeless on the street. The IRS lady left the meeting with the accountant, found her husband, told the husband, if your wife doesn't pay me, I'm going after you because it's community property state. He was so bothered by it that he filed for divorce because he didn't want any part of it. Okay? I said to her, I said, well, that never should have happened. No one should ever, IRS agent should never come and push their way into your home.
Right.
I said, write me a letter, exactly what happened. I'm going to make a call her boss's boss, which I did because, of course, I know people inside. Call this guy up. He said, my agent would never do that. I know that woman. I said, really? I'm sending you the letter. He gets the letter. He says to me, Mike, he says, I'm going to take it to TIGDA to clear my agent. I knew he was never taking it to TIGDA. Now, TIGDA is the Treasury Inspector General for Tax Administration. Okay. They're the internal police of the IRS, right? So I knew with that case I was going to win because I knew he never was going to do that, okay? And by not doing it, then he would have a problem if I did it, you know? So, okay. So I said, tell your agent I'm going to call her in about 20 minutes. I called this lady up. I said, I want all the records on my client, and then I'm going to call you back when I see him. I got the records. I called her up. I said, lady, my client doesn't owe you a dime. She says, what do you mean? I said, these are all 1099-G. She lives in Vegas. I said, my client has a gambling problem. She never made the money. She ended up losing more than she ever made. They had to drop the case. My client didn't have to pay anything.
Thank goodness for people like you.
Yeah, because if you don't stand up to him, but an agent like that, had I not won the case and dropped it and everything was copacetic, she would have been fired for the way she acted. You know, you can't, like I said, push yourself. You can't tell somebody in front of their account you're going to leave them naked and homeless on the street. I mean, that's not proper conduct. It's not professional conduct.
No.
And you can't go to the husband like she did and basically threatened him. So I think what Trump did by downsizing the IRS, 23,000 people took packages when he became president.
That's right.
And if you remember, and that entire 80,000 that was going to be hired never got hired. So the IRS is forced to be a little bit more efficient, but now they're using AI, which is making them more efficient because AI is amazing. They could do things that they couldn't do before. They're picking up on little things. Have you had any experience with the downsized IRS at all?
Well, I mean, we deal with the IRS every day. Right, because they audit different clients that we've done studies for. And, unfortunately, I think for me, and I always feel like this is the case in our country, when someone, a small business owner, a small family, gets an IRS letter, they're guilty until proven innocent.
Yes.
Right, and they have to immediately defend themselves of something they don't really know. Right, you don't have a clear understanding of what reportedly they're coming to you for, and you start have to paying and incurring CPAs and attorneys to defend yourself, because I almost feel like you're guilty until proven innocent.
Yeah, there are, and I'm glad you brought that up because I know I got some cases. Now, one case, the IRS lady came in to do an audit. She changed the accounting method, handed the client a $1.3 million bill. The guy actually ended up, his business was going bankrupt. I wiped out more than $1 million of that in appeals. But now I'm at the advocate's office saying, look, he shouldn't be liable for the other couple of $100,000 because they changed the accounting method. And that was totally improper on the part of the IRS.
Yeah.
And unfortunately, some of these IRS people, and I love a lot of them because I work there and there are a lot of good people.
Sure.
But there are also a couple of them where they're looking to make a name or something, and they're throwing out expenses that are legitimate, and you have to go through the appeals process to just get a fair shake or a fair settlement for your client.
No doubt, and it's very expensive.
And it's very expensive. So I mean, I I'm actually very glad that they didn't hire all those people and they got rid of a little extra, because I think that the IRS needs to be a little more efficient. And you're right. I mean, they don't need to be going after the small businesses.
But that's what they did, because they couldn't
Yes.
win at the big business.
They can't, right?
Right? They weren't
Right.
having a return on investment with the billionaire millionaires because they weren't winning.
Right.
And so go after the small business owner where you automatically win because
Right.
they have no resources.
Right.
Yeah, I think it's a horrible system.
Yeah, I agree with you. I mean, there's things in the tax code that people don't understand. For instance, the alpaca deduction, right? Mm-hmm. So if you buy an alpaca and you have an alpaca, you're able to write off everything related to that animal. So if you have a couple of acres, I mean, you get to write off the truck, the car, everything. It's the alpaca tax deduction. Now, it's been on the books since 2004,
Yeah.
right? And it's like, okay, how do we get that? Well, we get that because the people that are giving money to the Congress people who run for office, right, want stuff like that in there. And that's why the code, like you said, why the billionaires love the tax code, because they have all those little deductions in there that are 100% legal, but that were put in place just for specific groups.
Yeah, I mean, we have it for racehorses.
Yes.
You know, like, and,
Yes.
you know, you see them lobbying all the time for these.
Yeah.
And look, the tax laws, the tax code are made by 455 people in Congress.
Yes.
That 99% of them never signed the front of a check,
Right.
don't have any accounting experience, don't have any tax experience.
Right. That's
But
true.
they have a lot of influence from lobbyists, right? So
Right. That's
you see
right.
a lot of little strange things out there.
Right. Yeah, and that's why the tax code is so. I mean, the IRS, the manual is like this. I mean, it's thousands of pages. It's ridiculous.
Yeah,
It's,
like alpaca. How did that?
Right. How did
who,
that- exactly.
Who got influence there? And no one looks at it, right? Like
Right.
when you get a tax bill,
Right.
it's hundreds of pages.
Right.
And alpaca is one sentence in
Right.
that bill, right? No one
Right.
picks it up.
Right. Exactly. But it's having that inside knowledge that allows people to save all the money to really. That's why I guess people like Bernie Sanders are always out there complaining about the billionaires and the millionaires, but they don't realize that they have the power to change the tax laws, but they don't. And
Yeah.
the reason they don't is that the donors are putting them in office.
Right. That's what Trump said to Hillary Clinton, right?
Right.
If you wanted to change the tax law,
Right.
you would have changed it,
Right, exactly. And they didn't.
And they didn't.
That's
Yeah.
that's very, very true.
right?
Yeah, that's true. That's right. And it's just, I mean, look, do you know, like all these politicians, look at them all, right? They all have foundations,
Yeah. A great way to get a tax write-off.
right? So
And pay yourself.
And pay yourself, right? So now what happens is you leave Congress, you leave the Senate, you're not the president anymore. You have your own foundation. All the money goes into the foundation.
Well, we know the Clinton
Right.
Foundation did pretty well.
They did very well, right?
Right.
And the money didn't get cut off until when she didn't become president in 2016, right? Then all of a sudden, nothing. So what does that tell you?
I think it tells you everything.
Right. Exactly. And it's no coincidence that whether it be the Obama Foundation, the Clinton Foundation, they're all used as tools for tax savings purposes, and so they're all nonprofits.
That's right.
They're all nonprofits.
That's it.
I mean, so basically, we get some insight into what they're doing and how they're doing it, because certainly Obama, Clinton, they're not exactly paying their fair share, if you will, because
No,
they
they're
use their
probably
foundation.
paying very little.
Right? Exactly.
Very little. The average small family, hardworking American
Yes.
pays about 50% of their
Right.
net income in taxes. So they get
Right.
half from federal and state.
Right.
The average corporation billionaire, under 10%. Big gap, right? But they're all using the same tax code,
Right. Exactly.
right?
Exactly.
They're just using it a little better.
And I think that Trump did a great job with the $6,000 deduction for senior citizens,
Great.
which I think is great. Which originally was kind of my
And
idea.
eliminated
when I
a lot
ran
of
for-
the taxes on Social
did.
Security, and then
Yes.
gave the $6,000 exemption
Yes.
as well. I think that was powerful.
Yes, and no tax on tips, no
Right.
tax on overtime. I
Great
mean,
benefit.
great benefit. I mean, I don't really want to delve into politics, but don't you think people are going to see that when they go to vote in November? I mean, they're going to see the substantial returns. The middle class really probably benefited the most. I mean, the Democrats would like to get out there and say that it's the rich and the wealthy, but in reality, if you are a waitress and you don't have to pay tax on $25,000 worth of your tips, or you're somebody that works a lot of overtime,
Yeah.
that's a tremendous tax savings.
We saw with our accounting firms, they reported to us that the refunds so far this year from last year have been 3 times greater
Yes.
than they were the previous year for that same client.
Right.
Right? So, and 105 new tax deductions for small business owners, individuals. It's not for the billionaires, because after $500,000 or whatever, it phases out, right? So it's not utilized by anyone. And we did the education credits.
Right.
We increased the child tax credits.
Right,
More children
exactly.
get a better tax write-off,
That's
right?
right.
So,
Right.
like,
That's right.
Like a lot of things there.
Right.
And that's why we're seeing triple the refunds.
Yes.
That's substantial.
Substantial,
That's
it
real
is.
capital, right?
That's
Or
right.
now we're not paying 50% of our net profits. Maybe we're down to 40%.
Right.
And like when the government's your partner in business,
Right.
when they're 50% of your partner, that's onerous.
That's right. It
But
is.
when you can get it down, and I think that's what they were trying to achieve with this new tax bill, then you have a reasonable partnership with the government. You can have a little extra money to invest in your business. Or we put in the tax bill ways to invest in your business and get immediate write-off, right? We can buy equipment now and write it off. Before we had to amortize it over 5 years,
Right.
although we already bought it. We already
Right.
paid for it.
Right,
We couldn't
exactly.
write it off.
Right. That's true.
So now people can invest in their businesses.
Yes.
They can invest in their families.
Yes.
They can invest in education. We gave some
Yes.
more education credits
Yes.
for
That's right.
even people that are professionals.
Yeah.
And we made a lot of big differences. And that's why we're seeing
Yes.
much bigger refunds.
Yeah.
Not the 300 and 400 they're saying on media.
Right. Exactly.
Dollars more? No, it's triple.
Right. That's why I think the Republicans can keep the House if gas goes down a little bit and a couple of things, because when you start seeing a refund that's 3 times what you got the year before, are you going to vote for the other party?
No. And by the way, I would say this about the gas.
Yes.
Right? You know, if it's used for business, it's a tax write-off.
Yep.
You know, the cars can be immediately expensed now.
Yes. Exactly.
So,
Right.
even though we had a little hiccup with the oil, the gas, right? I think there's some offsets there
Yeah.
that we have in the new tax code. And ultimately, I think the prices are going to come back down.
Yes. I think
And
you're right.
I think, fortunately, our country is going to be a lot safer.
Yes. Yes.
Which, I mean, it's hard for the younger people to remember 9/11.
Yes.
But
Right.
for you and I,
No, I was a 9/11 responder.
see, so
I was at the dumps looking for body parts.
yeah, so
'Cause,
you
yeah.
it wasn't that far long ago. Although
No.
most people maybe paying taxes today didn't experience that.
It's mind blowing that they put a Muslim mayor in New York City after 9/11, 20 years later.
It's hard. The free grocery stores have
Right.
already closed. There's
Right.
been no free sub.
No buses, no free buses, right? Exactly. Nothing
Everything
he
that he
promised.
said was going to happen
Never has.
never happened. The only thing that happened is all the companies are moving out to South
That's
Florida.
That's right. Exactly.
Right? He's become. They keep
Exactly.
saying the mayor there's
Exactly.
the realtor of the year in
Yeah,
South
that's
Florida, right?
That's right.
Right,
You're
because he brought
You're right.
everyone down here. Ken Grove,
Stephen
Ross,
perfect
they're not going
example.
back.
They're not going back, right?
They're not going back.
Right, right. The fact that he was sitting outside his house saying,
That-
I'm going to
that's-
tax the rich.
I feel like that's criminal.
It is. It almost is.
Why
It
would he
should be.
do that?
He's not smart. He's
But
not smart.
Citadel's not staying in New York
He's not
now.
smart. No. Well, no, let me tell you something. Communism has never worked anyplace.
Yeah.
You're going to, instead of giving somebody an incentive to go out to work and produce something, you give them an incentive to stay home, sit on the couch, and do nothing.
And why would you do that? But look, I'm going to say this because I grew up in Miami.
Yeah.
And I grew up in the days there at Jimmy Carter. And I think this is relevant.
Oh,
because,
yes, my God, yes.
Because Jimmy Carter,
remember
we
him,
had great
right.
Latino communities.
Yes.
Everyone was hardworking.
Yeah.
Grandma, the seamstress,
Yeah.
Grandpa, the mechanic, my uncles, my father. Everyone's in the family business. And that's every house. Every house has 4 generations. But then Carter said, we're going to bring in the Cuban
Right,
prisoners.
right.
Right, they're going to release the prisoners
Destroy the place.
and come to Miami, and we're going to bring the drugs in from all over Latin America. And what happened? The drug lords became the employers.
Yeah.
Right, we moved out
Destroy the
business,
place, right.
and all the fathers, all the uncles went to prison.
Right.
And then what happened? My whole family got dependent on welfare,
Right.
on the free cheese on Fridays, the
Right.
free powdered milk, the free
Wow.
fake orange juice. And all of a sudden, your family's thinking, that's a great thing.
Right.
What?
Exactly.
Meanwhile, everyone's sitting in prison because you let all the illegals in and made
Right.
them the drug lords and the employers.
Well, we're out of time.
Okay.
But Julio, you were a great guest. Thank you for being on the editor's desk.
Yeah.
And please pick up a copy of his book, Why Billionaires Love the Tax Code. Mike Vilardi, till next time.
Tax alert! Tax alert!
I was receiving letter after letter from the IRS.
I got Mike Vilardi on the phone and I said, Mike, I got a problem.
He took the pressure off my shoulders.
He just made me feel like I had Superman on my side.
Trust me, he's the man to go to.
IRS problems? I'm Mike Vilardi, enrolled agent. I can help. My company, Winning Tax Solutions, has always gotten our clients the best possible results. Visit us at winningtaxsolutions.com or call us today.
On Editor's Desk, we uncover the patterns that connect prophecy with the world we face today. Michael Vilardi's insights challenge us to look deeper, ask harder questions, and prepare for what may come. Thank you for joining us on this journey of understanding. Be sure to stay connected, share the message, and continue seeking truth. Until next time, remember, awareness is the first step toward readiness. This has been Editor's Desk.